Welcome to a journey through time, where we traverse the intriguing pathways of the Indian stock market. Our story begins in the year 1875 in the bustling city of Bombay, now known as Mumbai. Amidst the vibrant chaos and the rich cultural tapestry of the city, a new chapter in India's economic history was being penned. It was here that the Bombay Stock Exchange, the oldest stock exchange in Asia, was established. This was an era when the British reigned supreme in India, and their influence was evident in the initial structure of the stock market. The British brought with them their economic practices, systems, and ideologies, which laid the foundation for the Bombay Stock Exchange. It started as a small gathering of stockbrokers under a banyan tree and gradually evolved into a thriving hub of financial activity. Over the years, the stock market became an integral part of India's economic framework. It grew and evolved, reflecting the changing times and the dynamic nature of the Indian economy. It weathered wars, political upheavals, and economic crises, each event leaving an indelible mark on its landscape. The 1950s and 1960s saw the market thrive with a surge of public sector companies going public. The 1970s brought with it the nationalization of banks and a shift in economic policies. The 1980s witnessed the advent of the computer age, and the stock market was not immune to its effects. It was a period of rapid transformation, with the introduction of electronic trading and the phasing out of traditional trading methods. As the 1980s gave way to the 1990s, the Indian stock market was on the cusp of a new era. The winds of change were blowing strong, and the market was ripe for a revolution. The stage was set for a financial metamorphosis that would forever alter the face of the Indian stock market. As the 20th century approached its end, the Indian stock market was on the brink of a revolutionary transformation. The 90s brought with them winds of change, and the Indian stock market was no exception. As the calendar flipped to a new decade, India found itself in the throes of a major economic crisis. The country was on the brink of defaulting on its international debt obligations. It was in this precarious situation that the Indian government took a bold step. In 1991, it embarked on a path of economic liberalization, opening its doors to foreign investment and paving the way for a free market economy. This was a turning point for the Indian stock market. The liberalization measures brought about a significant expansion in the market, with new sectors and industries emerging. It was no longer a playground for the elite, but a platform for the common man to create wealth. Amidst this wave of change, another significant development was taking shape: the creation of the National Stock Exchange, or NSE. Established in 1992, the NSE marked the beginning of an era of modernization and increased competition in the Indian stock market. The NSE was unlike anything the Indian stock market had seen before. As the first demutualized electronic exchange in the country, it introduced an efficient and transparent trading system. It brought about a paradigm shift in the way trading was conducted, moving away from the traditional outcry system to an automated, screen-based trading system. The NSE also played a crucial role in popularizing the concept of index funds in India, with the introduction of the Nifty 50 index. This provided a benchmark for the performance of the Indian stock market and gave investors a tool to compare their returns with the market. The NSE's impact was transformative. It injected a new level of competitiveness into the market, forcing the Bombay Stock Exchange, which had enjoyed a monopoly until then, to reform and modernize. The liberalization era not only transformed the market infrastructure, but also opened doors for the common man to participate in the stock market. This was not just a period of financial reform, but a time when the Indian stock market truly came into its own. The dawn of the new millennium saw the Indian stock market facing its first major test. As the world celebrated the turn of the century, a digital revolution was unfolding. The dot-com bubble had begun to inflate, and India was not immune. The late 90s were a time of rapid technological advancement. The internet was transforming businesses, and companies with a .com in their name were suddenly worth millions. Investors were captivated by the allure of the digital age. The stock market, including India's, was awash with optimism, and technology stocks were the stars of the show. But the party didn't last. By 2001, it became clear that many of these dot-com companies were not as profitable as once thought. In fact, some were not making any profits at all. The bubble burst, sending shockwaves through stock markets around the globe. The Indian stock market was hit hard. The BSE Sensex, which had soared to unprecedented heights, plummeted dramatically. Investors were left reeling. Confidence waned and the market was in turmoil. But from this chaos, important lessons were learned. The crash underscored the need for stringent regulations and prudent market practices. In response, Indian authorities introduced significant changes. Transparency was increased, corporate governance strengthened, and risk management systems were enhanced. Furthermore, the crash sparked a shift in investor mindset. The era of get-rich-quick was over. Investors began to appreciate the importance of due diligence. They recognized that behind every stock is a real business, and its true value cannot be determined by hype alone. Despite the setback, the Indian stock market proved its resilience and emerged stronger, ready to face future challenges. The crash of 2001 was a painful reminder of the perils of irrational exuberance. But it was also a catalyst for positive change. It led to a more mature, robust, and resilient Indian stock market, better equipped to navigate the highs and lows of the global economy. The year 2008 marked a global financial catastrophe, and the Indian stock market was not spared. As the year unfolded, a financial storm was brewing half a globe away. The United States, the world's largest economy, was teetering on the brink of a colossal financial meltdown. The subprime mortgage crisis was the initial domino, and its fall triggered a chain reaction that swept across the globe. It was a devastating tsunami that didn't discern between shores, and the Indian stock market was no exception. The Sensex, India's benchmark stock index, plunged dramatically. In January, it was riding high at over 20,000 points. By October, it had plummeted to nearly 8,000, a shocking 58% drop. Investors watched in disbelief as their portfolios disintegrated before their eyes. The market was in a free fall, and it seemed like there was no bottom in sight. But amidst the chaos, India's regulatory authorities stepped up. The Reserve Bank of India, or RBI, and the Securities and Exchange Board of India, or SEBI, acted swiftly to stabilize the market. They slashed interest rates, pumped liquidity into the system, and took measures to restore investor confidence. It was a mammoth task, but they were determined to steer the market back on course. The recovery was slow and arduous, but with time, the market began to regain its footing. Investors, chastened by the crisis, became more discerning. They started to look beyond quick profits and focused more on fundamentals. The market matured, and so did its participants. The 2008 crisis was undeniably brutal, but it also served as a wake-up call. It exposed the market's vulnerabilities but also highlighted its resilience. It forced regulators to tighten their reins and investors to rethink their strategies. It was a bitter pill to swallow, but it was also a valuable lesson. The 2008 crisis was a stark reminder of the market's vulnerabilities but also showcased its ability to bounce back. The COVID-19 pandemic has caused the most universal health and socio-economic crisis in recent history. After the outbreak of the COVID-19, the stock market came under fear as BSE Sensex and NSE Nifty fell by 38%. It leads to a 27.31% loss of the total stock market from the beginning of this year. Governments were quick to intervene to try and limit the impact of the crash on the economy and help markets recover. Central banks cut interest rates to stimulate consumption and investment, and greater regulations were introduced in the financial world to guard against further excesses. These steps and belief in India's economic strength helps Indian stock market to get the V-shaped recovery. Today, the Indian stock market stands as a testament to its journey, reflecting the growth and dynamism of the Indian economy. In the kaleidoscope of global finance, it has emerged as a vibrant and influential player, offering a myriad of opportunities for both domestic and foreign investors. The Indian stock market, as we know it today, is a bustling hive of activity. With over 5,000 publicly traded companies, it's the world's largest market by number of listed firms. It's an arena where dreams are born, ideas are funded, and economic prosperity is shared. This market is not just a reflection of India's economic prowess, but also a catalyst for its future growth. It's where startups find their footing and established corporations raise capital for expansion. As of 03 RD October 2023, India is home to 111 unicorns with a total valuation of $349.67 billion. It's a barometer for the nation's financial health and a beacon for global investors seeking robust returns. Today, the Indian stock market is globally recognized for its robust regulatory framework and transparent operations, thanks to the vigilant oversight of bodies like the Securities and Exchange Board of India. Through mechanisms like electronic trading and depository services, it has made investing a hassle-free experience for millions. But the journey doesn't stop here. The Indian stock market is on a path of constant evolution. With the advent of concepts like algorithmic trading and robo-advisory services, it's embracing technology like never before. And as it does, it's opening up new avenues of investment, making the market more accessible to the common man. The future of the Indian stock market looks promising. With India's economy projected to be among the world's largest in the coming decades, the market is set to play a pivotal role in this growth story. It promises to be a platform where wealth is not just preserved, but multiplied, offering opportunities for investors to participate in the nation's economic journey. From its humble beginnings to its present glory, the journey of the Indian stock market is a tale of resilience, evolution, and endless possibilities. As we look ahead, we see a market that's ready to scale new heights, a market that's poised to script a new chapter in India's growth narrative. Please drop a comment for any query. Do like, share, and subscribe if you find this video informative. Thank you.